Hi, my name is Oluwaseyi Adeosun from ARM Investment Managers, and I'll be giving you an update on the macroeconomic and financial market events for August 2021. According to the data released by the National Bureau of Statistics, Nigeria's Q2 2021 gross domestic product grew by 5.01% year-on-year, reflecting a third consecutive quarter of growth. The economic expansion was driven by low base effects, resulting in the non-oil sector growth of 6.74% year-on-year, and moderated by the 12.65% decline in the oil sector. The contraction in the oil sector, despite the rising oil prices, was a result of the lower oil production volumes of 1.61 million barrels per day. The growth in the non-oil sector, on the other hand, was underpinned by the expansion in the trade, ICT, manufacturing and agricultural sectors respectively. Headline inflation sustained a downward trend for the fourth consecutive month, declining by 37 basis points in July to print at 17.38% year-on-year. The moderation in headline inflation was on the back of the 80 basis point decline in food inflation, which printed at 21.03%, despite the 63 basis point uptick in core inflation, printing at 13.72%. The moderation in food inflation was largely due to base effects, while the uptick in core inflation was driven by increases in clothing, footwear, furnishing, and household equipment, as well as education. The equities market recorded another positive performance in August, with a return of 1.74%, while the year-to-date performance stood at a loss of 2.61%. Market activity was largely muted and continued to be dominated by retail investors. There is yet to be any major reaction in the equities market to the declining yields on fixed income instruments, evidenced by the low level of activity in the market, even as the institutional investors remained cautious and stayed on the sidelines. August performance was mainly driven by gains in telecom sector, while losses were recorded in the consumer goods, insurance, oil and gas, and banking sectors respectively. Specifically, the market's performance was on the back of gains in Airtel, MTN, Honeywell Flour, Transcorp Hotels, and Presco. Fixed income yields maintained a downward trend in August on the back of sustained demand. Financial system liquidity moderated slightly, reflecting the 58 basis point and 53 basis point rise in open buyback and overnight rates, printing at 13.28 and 13.73% respectively. The Treasury bill auctions held during the month were oversubscribed, with stop rates on the 364-day paper declining 140 basis points to close at 6.8%. Similarly, at the secondary market, yields dropped by an average of 110 basis points across the curve as investors sought to invest idle funds. In the bond market, bullish sentiment drove yields at the secondary market down by 88 basis points to close at 10.77%. While at the monthly bond auction, demand was seen across all tenors on offer, with bid to cover ratio settling at 3.55 times, whilst rates declined 75 basis points, 40 basis points, and 45 basis points respectively on the 2028, 2036, and 2050 maturities. Given the lack of a major catalyst to drive bullish sentiment in the market, we expect the activities in the equities market to be muted even as institutional investors remain cautious, whilst retail investors dominate the scene. Nonetheless, we note that a sustained moderation of the fixed income yields could serve as the much needed boost to spur positive sentiment in the market. We believe there's some scope for further moderation in fixed income yields in the coming months, albeit at a slower pace. Our expectation is hinged on the back of improved financial system liquidity and sustained demand, which could likely exert downward pressure on yields. On the other hand, we note that the issuance of the fourth quarter bond calendar would provide guidance on the supply dynamics, which could help provide stability for the market. A quick recap of what we've discussed so far. Nigeria recorded GDP growth in Q2 2021. Inflation maintained a downward trend. The equities market recorded another positive performance in August, and yields moderated further in the fixed income market. I hope you found this insightful. Should you have further questions or inquiries, please do not hesitate to contact your relationship managers or our customer care representatives. Remember, we remain invested in your tomorrow.